The Zacks rank, value, momentum, growth, and income all factor into Zacks rank buys.
We're going to talk about marijuana in this segment, at least stocks associated with marijuana. Our strategist, Ryan McQueenie, is going to fill in all those blanks for us so we have a better understanding, right?
Yeah.
So there's two stocks here. First one, Innovative Industrial Properties. Doesn't sound like they're involved in marijuana to
Yeah,
me.
so that's one of those funny little names I think that they gave themselves because it's a U.S. company, so still a legal gray area, if you will. The difference between IIPR and some of these pure play stocks that we're talking about in marijuana right now is that IIPR, as I said, is a U.S. company. Many of the names that get kicked around on the investing forums these days are Canadian producers of marijuana.
Oh, okay.
So IIPR is still, to me, a pure play in the cannabis industry, but it's a little bit different because it's not a producer. It's actually a REIT. They own facilities used in medical cannabis production and medical cannabis cultivation. So their properties that they own are actually in states in the United States that have legalized medical marijuana. So that's a little bit of a different model, but one that to me makes sense. And two, you're getting a clearly defined market there. They're ready to move into these states as they individually legalize medical marijuana. Right now, 10 properties, still definitely getting out there and acquiring more. Just $3.9 million in revenue in the most recent quarter. That was up 150% year over year, though, so we can see starting to pick up the pace a little bit here. And I think a couple of the more interesting things to me is obviously it's a really unique type of REIT. That's why we're talking about it right now. But in the REIT world, it's also a bit of a rarity in that it doesn't really have any long-term debt right now. And that's the type of financial positioning that's going to allow it to snap its fingers and move into those states one by one as they individually legalize medical cannabis, as I was mentioning before. It also shields it from rising interest rates and the rate sensitivity we typically associate with REITs. So that's another positive in this rising rate environment. And then, we're talking about it on this show, which means there's something to do with the dividend here. There's some income. It's a REIT, so it's legally obligated to pay a good number of its earnings, a good amount of its earnings to shareholders. It already has a really solid dividend history for how young the company is. 35-cent per share dividend in the most recent quarter. That was up 40% from the prior quarter. I like that. It's a 2.8% yield right now because the valuation has gotten a little bit stretched as I think people are piling in as one of these kind of speculative marijuana plays. It's certainly a small company, still kind of like a growth play, if you will, but one where you're saying, wow, I'm getting a dividend on a marijuana stock right now. That is obviously a unique opportunity. I did want to mention, though, in the near term, as we can see from its price consensus and EPS surprise chart, young stock, as I mentioned, IPOing really just at the start of 2017, late 2016 there. We only have one analyst tracking the earnings estimates right now. And so, take these consensus lines with a little bit of a grain of salt. It is a REIT, so this consensus line is actually looking at the funds from operation per share. And plus with the one analyst, it takes a while for these stocks after the IPO for these analysts to get a sense of the estimates. And then, with only one tracking the Zacks consensus is a little bit less of a group thought, if you will. But as we can still see here, the earnings consensus has been inconsistent. It's slumped down here for 2018 relatively consistently throughout the last few months. The 2019 consensus was up for a bit. Now it's back down. We actually, because of these recent negative revisions, this recent negative adjustment to the outlook, we actually have it at a Zacks rank number 4 sell right now. The Zacks rank a 1 to 3 month indicator. This is obviously something where I think most people are excited about it very long term, but definitely a really interesting opportunity to invest in the cannabis industry here in the United States, and a cannabis stock that pays a dividend, which is a unique opportunity. Not the only opportunity, but a unique one, definitely.
Well, here's another opportunity to get into that industry from what you tell me. Now, I would never associate this name with marijuana. Scott's Miracle-Gro company. I think of lawn and garden care.
Yeah, so it almost feels cliche to bring it up because it's like, wow, it's
Because they grow.
a fertilizer company and marijuana. Wow, a genius I must be to make that connection.
Yeah.
But I think it's a little bit more direct of exposure to the business than some people might realize. A few years ago, we were talking about how Scott's developed this soil specifically for marijuana growers, and that's all well and good if they can make some cash with Scott's or Miracle-Gro branded soil. The part of the business that's much more directly exposed to this is their subsidiary that's called Hawthorne. It's their hydroponics division. Mm-hmm. Hydroponics is, of course, indoor growing of many different alive things.
Right.
And you can certainly grow tomatoes hydroponically. You can also grow marijuana hydroponically. So this is where we're sensing there's a bit of marijuana interest from Scott's Miracle-Gro. It was 11% of its revenue in 2017. And then, that's all well and good. Maybe that ticks up higher if the marijuana growers are more interested in the hydroponics route. But it definitely is going to tick up higher because Scott's Miracle-Gro has realized this is a growth opportunity and is kind of doubling down on it. Just a few months ago, acquired a company called Sunlight Supply. I believe it was based in Ohio. Bought it for $450 million. It's a hydroponics company. It's a hydroponics company that is more specifically focused on marijuana growers. Already at 11% of its business in hydroponics. How much of that is coming from marijuana growers, we don't know. But then going out and spending $450 million on a company that is probably a little bit more focused on marijuana. Mm-hmm. I do think this is a little bit more of a direct exposure than we might have given it credit for just a few months ago. I think Scott's has also, over the last several years, kind of really said publicly there's not a ton of growth in this core business of ours anymore. They've actually divested some international units here and there. The focus is shifting to where can we find that growth while the growth is in the marijuana business. As we can see here from the estimates, the growth, there's no growth anymore. I mean, there certainly is growth. We're looking at double-digit percentage growth here in revenue, double-digit percentage growth in earnings for the fiscal year ending next September. So that's certainly interesting. And then, it's a more established company. It pays a dividend, 3% yield right now. If you look at its history, it typically adds about 2 to 3 cents to the quarterly payouts per year. And that trend has held up over the last several years.
You seem to take too much pleasure and enjoy talking about this topic.
Well, I mean, it's one of these things that's really dominated the conversation for a lot of retail investors.
True.
In 2018, and I think rightfully so. Obviously, it's a new, fun, and exciting business. It's one that we're still learning about. It's one with almost limitless growth potential over the next several years, especially with the potential for such a major market here in the U.S. to grow so exponentially, in a short period of time, depending on the legalization situation. But we talk so much about these Canadian producers, and these valuations are getting so blown out of proportion because of the speculative trading. And I understand that. I get that that's going to happen when we're excited about these new markets. I just think, people need to realize there are more options out there than just those Canadian producers if they want to capture a bit of this growth.
Sure.
And I think by looking in and doing your due diligence and realizing there are these other options that maybe not everybody has realized yet, you might be able to benefit a little bit more than others.
All right. Do you own either of these two?
We do not. I do not personally, and we do not in the income investor portfolio either.
All right. The things we learn here, huh? Well, if you want to learn more information, don't forget to check out Ryan's free lunch streaming video program, and you can check that out on most major streaming platforms. And then if you want to check out information on technology, he also produces an audio podcast called Tech Talk Tuesdays. That's on the podcast page of Zacks.com. With Ryan, I'm Terry Ruffalo.